What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. Just make sure you hit that like button. If you haven't already, hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. We do release bonus content from time to time, so you do want to know when those are released. But the nightly and weekend videos that we do daily mostly identify triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades as well. So if you want a deeper dive into exactly how we set the charts up, broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And then if you are not familiar with the STRAT, make sure you check out the link in the description of this video. There's a free PDF quick reference guide that we've gotten there for you that will help you basically pick up the STRAT very quickly. It's very simple to method to learn, but it provides a lot of insight into price action. So I do recommend you go ahead and check that out if you're not familiar with it. So I do encourage you to stay with us for the full video. We do go over triggers and targets, but we cover all time frames, so we give some pretty good insight. So with that, let's go ahead and jump into the agenda. We'll go ahead and recap the price action from today, Thursday, February 19th, before we zoom out and take a look at the week, month, quarter, and year price action. Then we will take a look at what the market maker's expected move is for Friday, February 20th, before we zoom back in and set our 4-hour markers and the triggers and targets for Friday, February 20th. Then we'll take a quick look at the triggers and targets for the week, month, quarter, and year as a quick review. All right, so let's go ahead and jump into the charts like we normally do, starting off with the 5-minute. This is how we take advantage of our proven and repeatable strategy, getting scalps, early in the morning or, just early entries into full day trades. The method that we use, we look for higher lows at or above the opening print or the opening trading price for the day. If we get higher lows at or above opening print, we look to get into calls, targeting overnight high and previous high a day. If we get price action with a lower high at or below the opening print, then we want to look to get into puts targeting overnight low and previous low a day. Right. So today you can see nothing, right? Sideways action. The one day that I actually had a little bit more time to dedicate to trading today, there was really nothing. And I guess I'm kind of lucky, or kind of glad that although I did have a little bit more time to dedicate to trading today, it wasn't that much more. And I'm kind of glad, because I don't know, this looks like kind of a waste of time to me when I look back at this. If you were trying to pick something off on the very micro time scale, you could have had some success. But if you were looking for some full day trade, or a continuation in some swing that you're already in, or looking to get into a new swing, wasn't a lot there for you, right? We opened at 64.33, closed at 65.23. If you're familiar with SOXL, that's barely any movement at all. And even the day's high and the day's low wasn't that big of a range for SOXL. Let's see, the high was 65.51 and the low was 62.96. 63, so about at $2.50. So very tame day for SOXL overall. You had your opportunities for scalps, but from the proven and repeatable strategy standpoint, there wasn't a whole lot there, right? We went ahead and pushed down. We made a lower low, right? If we bring in Wednesday's price action, here was the previous lows in Wednesday, and we have obviously gone below that. So we made a lower low, made this lower high, not even lower high, this wicking action here at opening print. So it did kind of seem like we may get that further continuation to the downside, back through overnight low, which was what we bounced off of initially, but continue to go ahead and push up. Did make a lower high, but it was above opening print. The one thing you can say, it was a lower high not only in relation to the previous high of day, but to the last high of Wednesday. So that could have been your trigger to the downside to get into some puts, right? But you would have wanted to, for this 2 up or this 3 candle to be locked in as that lower high. And in order to do that, you had to get priced down below the low of this 3, which you did, which it triggered, but immediately reversed and went back up, but then made a lower high. So it just consolidated right along that opening print level, a little bit above, a little bit below. Saw a little bit of a bounce here to go retest last week's 50% level line as we did early on in the morning, but failed it again. That obviously led to a little bit bigger of a sell-off. If we look at the 15-minute, and let's just look at today's price action. There we go. This was technically a higher high and coming from a higher low, so it wouldn't necessarily be a trigger to buy the put here unless you were strictly playing the level last week's 50% level. And if we look to the left, it's been support. It was support yesterday. It was resistance the day before. A little bit of both the day before that. So obviously a big point of inflection for price action this week. So if you were looking at it from the standpoint, okay, we failed it early, as soon as the market opened, we failed it not too long after the market opened, we failed it again here. If you wanted to enter there, I wouldn't be mad at you either. You're just slightly above opening print as well, so you're really close to where price opened up. And if you were to push down through opening print and get that lower high on like the 5-minute time frame, then that would just kind of lock you in or solidify that position at least for a little bit longer until you could see, do we get that lower low, lower high, which you did here. But then again, it just, even after you got that, it just flattened out. So probably a pretty frustrating day if you're trying to play today off of anything other than like the 1-minute time frame. Let's see, that's the 15. I didn't even take a look at what the 1 hour looked like. Did we get a lower high? No. So tried to go 2 up here, that second hour of price action today, which it would have given us, if we failed that, continue to go down like we did the rest of the day, would have given us a lower high. But as of right now, just looking at the hour time frame, oops, bring this in a little bit more, right? So we have this low, we've got a soft lower high right here, soft higher low here, pushed up. This is where we made a more solid lower high in comparison to these highs. Came down, made a higher low here, pushed up. Now we've got our lower high in comparison to this. It is a higher high in comparison to this price action here. So we've just really got a broadening formation. Let's just make it a little bit more visual here for folks that may need a little bit more visual there. So you kind of got that high to high there and your low to low here. And we're just playing within that broadening formation, right? So not a whole lot to say there from the 1 hour time frame. And we've been saying for really a couple weeks now, ever since we've gotten this kind of trade, this range that we've been trading in for the last couple weeks, that the 1 hour is really the tell, right? So so far it looks like we've got the higher low. So if you did, actually I don't even want to say higher low, because if we look at this carefully, right, this is your 2 down, obviously. 2 down, 2 down, 2 down, 2 down. We never went above the high of this 2 down, right? So we never actually went 2 up to this the lowest point of this downdraft, right? Pushed up, never went 2 up, came back down, made higher lows in comparison to this candle, but we never went 2 up. So it's not necessarily a higher low following a lower high. Signaling consolidation or the start of an uptrend, right? And then this candle right here still isn't above the high of this 2 down. So this 1, 2, 2, 2, 2, all these 1, 2, 3, 4, 5, 6, these 6 candles can really be combined with this 2 down for a combined 2 down candle. So we really haven't gone 2 up on the 1 hour yet to lock this in as a higher low and then determine whether we're going to get a lower high or not. So if we go 2 down tomorrow, I'm not necessarily going to count this a lower high, a solid lower high. I would count this just more as a continuation of this downdraft. But that's just, me personally. You can always look at it how you want to, but that's how I'm kind of looking at it right now. Like, we haven't even really popped up from this downdraft. We've just kind of gone sideways. So, the 1 hour still kind of up in the air, right? 4 hour still in the pretty much up in the air as well, showing consolidation. Let's get a cleaner chart out here. There we go, a little bit cleaner. Actually, let's just make it really clean. Right, so on the 4 hour, not really any trend here, right? We're still just in this range. We're towards the upper part of the range. If you want to be really literal about it, we can just box here, and we can say, this is the range that we've been in, right? Here's your little look above, failed back below. Here's your look below, came back above, right? Slight look above and fail, came back down to the bottom of the range, bounce back up to the top of the range, coming back down. We could still continue this on down to the end of, to the bottom of this range, making this a lower high, coming from a soft lower low. We've got all these 3 candles in here, which makes it a little bit harder to judge, because a 3 on this, we're looking at the 4 hour time frame, is really a broadening formation on the 1 hour and the 15. So they don't offer a whole lot of information, and that's why I really judge them as soft higher lows and soft lower highs and things of that nature. When the 3 is involved, I like to make solid higher lows or solid higher highs and whatnot out of actual 2 ups or 2 downs, right? Like this candle here, this made the solid whatever. In this case, it was a lower low, but so from the 1 hour, 4 hour perspective, we're still just kind of floundering. We're up towards the top of the range, trying to decide, are we going to pop out of the range and continue to push up, or are we going to fail again and push back down to the bottom of the range? Back down to the 58, $60 to $58 area. Really, it's kind of a bigger zone here, just with the breakout point, the initial breakout point at the beginning of the year, and the retests, right? So not a whole lot there. Let's go ahead and take a look at the day chart, because we did lock in a lower high today. All right, if we're looking at this, here's your high, here's your low, lower high, right? So now we've already, this 2 down locks this in as a lower high. Now we've got to see, all right, are we going to come down and make a higher low and just signal, consolidation, or are we going to make a lower low and start this downtrend on the day chart, right? That's the question at hand. So a little bit of patience is going to be needed, but this 2 up, 2 down, lower high has already triggered. So any further continuation tomorrow, you do want to look for that pressure on the month's opening print level, 59.51. And we'll see if we'll get another bounce there to signal that we're getting that consolidation. But if not, we've got this little sliver of a gap down here at 55, little sliver of a gap down here at 48, right? Does that bring us back down to the bottom of the range, maybe close this gap before bouncing back to the top of the range? Or do we come back to the bottom of the range and then fail out of it, right? Do we come close this gap, make some type of lower high here, and continue to the downside? We'll just have to wait and see. Is this lining up as some type of double top here? It's kind of messy here, but is that some type of double top? Possibly. We'll have to just continue to wait and see. The day and down day time frame and lower, there's nothing really definitive, right? So that's what we've got from that perspective. Let's go ahead and zoom out a little bit more and look at the week, because from the week and up, we're in a little bit more solid territory, right? So on the week chart, obviously, a couple weeks ago we locked in, or last week we went 2 up to lock in, the 2 down candle a couple of weeks ago as a higher low. So we are, still in the uptrend, haven't quite continued the uptrend yet because we haven't made that higher high. So far, we pushed up, like I said, locking in the 2 down 2 weeks ago as a higher low, but we've got to get that higher high to continue the uptrend. Otherwise, we're getting consolidation, or possibly even starting a rollover and make this a downtrend, right? If we were to go 2 down on the week, that locks in last week in as a lower high. And then if we make a lower low, now we're really looking at, the floodgates possibly opening up, because around this level is where we could trigger the 1, 2 up, 2 down on the quarter chart as well, which we'll get to here in a second. But as of right now, from the week chart perspective, we're still looking good, right? We've got We're playing up here in the 200% fib extension territory of the bull flag from the April low of last year. Let's go ahead and activate that so you can see it, right? All right, so there was your flagpole, there's your flag. So for the bull flag, and then we've got our fib extensions here, and you can see we're playing up here at the 200. So the 200 fib extension of that move, monthly broadening formation, weekly broadening formations, definite area of resistance, right? So just keep that in mind. It may take a little bit of time to continue that uptrend. We may get some of this sideways action, but just continue to be patient, right? On the month, I'm sorry, I said the quarter, 1, 2 up, 2 down. I meant the month, and this is what I was talking about. So if we go down too far on the month, if we lock in last week as a lower high, if we go 2 down this week or 2 down next week and lock in last week as a lower high, and we start that movement to the downside, filling this gap at 55, filling the gap at 49. If we go here and fill this gap at 45, the $45 level, then we technically kick off this 1, 2 up, 2 down strat reversal, right? And the magnitude is not the low of the 1, but the low of the candle to the left of the 1, which puts us right in range of another gap, right? And actually, that's a double gap. There were 2 gaps basically overlapping each other here, so maybe even more of a magnet than a single gap, but that's what we would have. And if we ran that to strat, then we would have a broadening formation here at the monthly broadening on the monthly chart, right? Because we've got this higher low, higher high. But if we come down, fill this gap and make a lower low in comparison to this low, no, we've got a lower low coming after a higher high, which again is just a broadening formation. So don't want to see that happen on the month if you're a bull. If you're a bear, or if you're just looking for better entries for the continuation to the upside later on this year, you may want that. That is a pretty decent pullback. It'll allow you to sell calls, buy puts on the way down, wait for things to bottom out, wait for the strat to complete, and then start to reverse and go back up. But again, that's getting into predictions, getting a little ahead of ourselves. We want to just wait and see how it plays out. Right now, that doesn't look as though it's going to be on the table. But if we do, see that price action start to pull back down, we'll start talking about it a little bit more. But for now, we're just in an uptrend on the month. On the quarter, not a whole lot here. We ran this 1 combo 2 down, combo 2 up, reversal strat. Magnitude was 70.08. So you can see we've completed that, getting a little bit of pullback there. So nothing crazy there. And then on the year, very early in the year, the beginning of January, excuse me, still getting over this cold. The beginning of January, we did trigger the 2 down, 2 up, but it has reached its magnitude as well up here at 70.08. So you see that little bit of a pullback there, and we'll just have to wait and see what ends up happening on the quarter and year perspective once some strat reversals or new strats appear on those lower time frames, on the week and things of that nature. So the week and the day especially. So just got to be patient on the real high time frames, those middle time frames, the month and the week. See a little bit more opportunity for some type of movement, but really all of the action is coming on the day chart and below, right? Just playing that volatility in the range that we've been in for a while, all right? That's enough from the zoomed in and zoomed out view. Let's take a look at the market makers expected move for tomorrow. Let's just go with this chart and the day. So if we pull up the 15-minute chart, we can see, if you're not familiar with this channel, orange values in orange lines, values numbers, anything in orange is representative of the day time frame. Purple is the weekly time frame. The light blue, H and L, those are just overnight high and overnight low. But you can see the orange and purple on this in this chart represent the daily and monthly markers. This purple dash line obviously is last week's 50% level, and then we've got our previous high a day, previous low a day. But as you can see here, we've got market makers expected move high up here at 68.84, and market makers expected move low down here at 61.62. It's quite simple to get this number. If we go ahead and there we go, bring up the options chain. Now this is Thinkorswim. They happen to have it here on the options chain for this week, right? You always want to pick the options chain for as close with the expiration as close to whatever you're gunning for. So since we're looking at just tomorrow's expected move, we'll take tomorrow's expiration. And if we go over to the right, we can see in parentheses there's a plus or minus 3.614, What that means is that the market makers expect a plus or minus $3.61 movement on price action, and that's from the close price on Thursday. So add 361 and you get add 361 to 65.23, you get 68.84. And then if you add 361 or subtract 361 from 65.23, you get your 61.62. Now there's also another way you can get it. If you don't use Thinkorswim, you can take the at the money straddle, which is, let's see, 65.23. So 66 is the at the money straddle, and you take the ask of the call, you take the bid of the put, and you add those together, so you get what's 130 and 170. That's 303. And then you take the in the money strangle. Wait, is that the? Did I calculate that right? 130. I'm sorry. The ask. I'm sorry. I said the bid. Take the ask of the call and the ask of the put, right? And you got 130 and 240. That's 370. So it's very close, right? If you just do it that way. Now, if you take that and then add in the money strangle, so you'd take 130 plus 240, plus 240, and then you would add 180 and 170, and then you divide by 2. That'll give you that 361 specific number, right? So if you just want an easy calculation, just take the at the money straddle. If you want the exact calculation, take the at the money straddle plus the at the money or in the money strangle, and then divide by 2. All right. So 361 is the market maker's expected move, and you can see that we've got it marked out here on the chart for ourselves, right? So with that, let's go ahead and take a look at how we will approach tomorrow. Let's get everything on the chart here for ourselves. Let's go to the 5-minute chart. That way, there we go. And this is how we capitalize on the proven and repeatable strategy that we use. There we go. I'm just trying to get all the levels on the chart for us here. So we've got market makers expected move high for the day, or for Friday, up 684. We've got previous high a day, overnight high, overnight low, previous low a day, and market makers expected move low for Friday. We've also got honorable mention here, the week flip. 6202 is where the week would flip red. So if you're a bull, you obviously don't want to see that the price action go below there. Now, overnight high and overnight low will probably move before the price actually opens tomorrow. So just for example purposes, we'll move them. Activate. We will move them here. And let's say yesterday we did an example where we opened towards overnight high. So we'll just do it more towards overnight low. So let's say we open up tomorrow right here around 64.21, closer to the overnight low. Well, it's the same thing. Doesn't matter where we open, right? So if we open here, we push up, maybe reject off of previous high a day or last week's 50%, we pull back, but we get some type of higher low at or above this opening print level, then we want to look to get into calls, first targeting previous high a day. Not a whole lot of magnitude there, so you may not want to get rid of your whole position or even part of the position. But the second target for that particular move, the move being the higher low at or above opening print, that second target is the overnight high. Right, so that's where you would definitely want to get rid of part of, if not your full position. If you wanted to get part of this position, leave some runners because we've got some momentum. Then obviously we've got the triggers and targets on the like the 4-hour time frame and the 1-day time frame that you can then turn to look to see where that next target is going to be. But for just this proven and repeatable strategy, early in the morning for scalps early in the morning, or for early entries into longer day trades, we're looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high day. On the flip side, if we get a lower high at or below opening print, we want to target overnight low and previous low a day. All right. Let's go ahead and flip to the 4-hour chart so that we can look at things from more of a day trade perspective. Let's take this out of there. All right. Make this a little bigger for everyone on phone. There we go. So you can see we had the opportunity today. We talked about, and I talked about yesterday, if we go 2 down in the first 4-hour candle, on Thursday, there was the opportunity for a 1, 2 down, 2 up reversal to form. And we almost got that, right? It pushed up. We're still inside, but it does still leave it on the table for tomorrow. So if we go 2 up in the first 4 hour tomorrow, first we've got to complete the 2, 1, 2 up strat, right? So we've got to get back to previous high day. But if we get above previous high day or above the high of Thursday, then that does trigger this 1, 2 down combo 2 up. Right, and the magnitude of that move is not the high of the 1, but the high of to the left of the 1. So it would be a decent move to the upside should we get that move. Now we've got to keep in mind, we've got this daily downtrend line here, this dashed orange line. We've got the 138.2 fib extension of last year's price action right here as well. So we do have some resistance that we should run into should we push to the upside. But should we break through there, we should reach the magnitude of that move, which very closely aligns with market makers expected move high. So very reasonable to expect that we could reach that market makers expected move high tomorrow. And just as a reminder, that's not an end all be all level, so price doesn't have to stop there. We can obviously go through it. It's just 70% of the time price will stay within that range, right? So that's what we've got to the upside. If we go to the downside, right, first we've got this 2-1-2 reversal, not a lot of magnitude there. Entry at the low of the 1, exit at the low of the 2, but it does kind of kick off this a little kind of sloppy, but combo 2 up, combo 2 down, magnitude of that move being the low of last week, or also the month flip. So that would blow pretty straight through basically the overnight low. I'm sorry, not overnight. Market makers expected move low and the week flip. So I would look at those as a bit of support. It kind of all depends on what the QQQ internals are looking like. But I would look at these levels as support before just fully targeting the magnitude of that move. But again, we're in this chop zone. We're in the middle of the range, so just stay on your toes. Don't maybe scale back on how many contracts you're buying. Just take a little bit of risk off the table when you're in the middle of a range, right? Wait till you're at those edges before you start putting down a lot more money or however you want to look at it, more contracts. But that's what we've got from the 4 hour, right? Still the opportunity for this 1, 2 down, combo 2 up. But at the same time, we're in the middle of the range and in the middle of this sloppy combo 2 up, combo 2 down that would take us back to the bottom of the range. So just stay on your toes and be ready for either one. Looking at the day chart, right, we have a two up, 2 down that triggered today. Didn't reach magnitude, obviously. That would take us back down to last week's low and the month flip. But that opportunity is still on the board, right? So tomorrow, if we go below previous low a day, then we can just continue, and it's a 2 up, combo 2 down. Still looking for that $59 level, essentially. Now, if we do push to the upside and we break previous high day, or if we break above Thursday's high, then that does trigger this 2 down, 2 up for a higher low, which would start to indicate an uptrend, or at least from a 1 hour, 4 hour perspective, to get us at least back to the top of this range. Not saying that this higher low 2 down, 2 up would push us up out of the range, but it should at least take us back to the top of the range. Maybe not in one day. Maybe one day we only get to the market makers expected move high, but if we get followed through on Monday of next week, then we should see that 70.86 to 71.98 level before we have to just wait and see, are we going to continue to push through, or are we going to go back to the bottom of the range, right? So again, just from a day perspective, the day chart and down, there's not a whole lot to say. You've got to just kind of stay on your toes, play the volatility, things like that. But let's go to the hard numbers right here. We've been looking at the charts a bit. So for Friday, February 28th, there'll be 218 trading days left in 2026. 65.23 was the close price on Thursday, February 19th, and we know what will flip the week, month, quarter, and year red. But for right now, we are in full time frame continuity to the upside. Week, month, quarter, and year are all green. We know that the market makers expected move for the week was plus or minus $8.96 from the close of last week's price action, giving us an expected range of 73.55 to 55.63. As you can see, we're smack in the middle of that. Now, the market makers expected move for Friday by itself is $3.61, giving us an expected range of 68.84 to 61.62. So we'll see how that turns out tomorrow. No gaps above right now, but we do keep in our notes the gaps below. Those could act as magnets moving to the downside. And we know that from a scalping perspective, we're looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. And then on the flip side, if we're going to get into puts, we want to see that lower high at or below opening print. And of course, the targets are overnight low and previous low a day. We talked about on the 4-hour time schedule or time frame. If we get that 212 up, that triggers at 63.29. Why am I saying 2 up? It's 2 down. Obviously, we're talking to the downside. We could get the 212 down, triggering at 63.29, magnitude being 62.96. So obviously, not a lot of magnitude there. So we've got some extended targets for you here. On to the upside, we would have that 212 up trigger at 65.26, magnitude of 65.51. So even less magnitude with this move, but that move would then trigger this 1-2 down combo 2 up. With an ultimate magnitude of 68.44, and we do have an intermediate target on the way to that magnitude of the 2 down 2 up of 67.13. On the day, if we go to the downside, it gives us a 2 up combo 2 down, triggering at 62.96. Magnitude of that move is all the way down at 59.56, but since we're in this chop zone, we're looking at 61.43 and possibly 60.66 as bounce points if things are going to turn around intraday. If they don't turn around intraday and we reach that magnitude and we continue pushing, we've got the extended target of 58.53 out there for you. To the upside, we would have a 2 down 2 up triggering at 65.51, magnitude of that move 68.44. So again, since we're in this chop zone in the middle of the zone, we've got this intermediate target here at 67.39. Was pretty good resistance in the past over the past week or so. Or, I'm sorry, not just resistance, but a good resistance support level, pretty strong one. So wouldn't doubt seeing a rejection there if things aren't pushing strong tomorrow. But at the same time, if we do reach magnitude of that 2 down 2 up with some momentum and continue to the upside, we've got the extended target of 69.67 out there for you. All right, on the week, we're still inside, more towards the upper half or upper third of previous week's price action, definitely in the upper half. But still 59.29 isn't too far for SOXL to go. So even if we were to just barely trigger it, there's quite a possibility for SOXL. So keep your eye on that. 59.29 would trigger the 2 up, 2 down, also locking in a lower high on the week time frame. Magnitude of that move going all the way down to 49.33. So just keep your eyes peeled for that. But if we push to the upside, and if we do actually trigger the 2 up on the week at 70.86, it's just a 2 down combo 2 up with the magnitude of 71.98. So not too much magnitude to go to reach the strat completion there. So it could happen in one day, but that's 65 to 72 is a pretty big jump. Even for SOXL. So we'd have to have a lot of things lining up, to get to that level. But it is still a possibility with SOXL. That's why we've got to keep it on the board. Highly doubt that we would get to these extended targets tomorrow. But we've got them out there. Leave them out there just in case. We talked about on the month, there is that threat of the 1 2 up 2 down. Got to get all the way down to 45.08 for that to trigger though. So for right now, won't really talk too much about it. We looked at it on the charts and we know what could happen. Magnitude of that move is 28.12. But for right now, we're just looking to continue this 2 up, 2 up, get above that 71.98 and get to these extended targets out here. Remember, 74.21 is the all-time high. So anything after that is blue sky territories. And then, of course, we talked about on the quarter, we ran the 1 combo 2 down, combo 2 up strat. And then on the year, we ran the 2 down, 2 up strat as well. So just waiting around on those higher time frames, the quarter and the year. Those are really waiting around for something to shake on the month and below. So just continue to watch those as long as we don't as long as we stay in force in those reversals, then we're all right. If we get back below those trigger levels, 50.76 that triggered those strat reversals, then we start to look at being in a little bit more trouble. But until then, things are still looking good from the higher time frames, right? The week and up, everything is still looking good. Nothing's broken down. It's just the day and below that is seeing the volatility, and even with that, we're still trading within a range. It's not like we're just pulling back at some crazy rate. So everything is still looking all right. I hope everybody has been able to capitalize on the volatility that we've seen on the smaller time frames. If you're more of a swing trader, then maybe right now you're just kind of sitting out. And we've talked about it before. Sometimes the best play is not to play. So there we have it. Those are your triggers and targets for everything from the scalping perspective all the way up through the 1-year chart. Tried to pack in as much information as we could without taking up too much of your time. So we hope everybody enjoyed the video. If you did enjoy the video and you've made it this far, the only thing that we ask is that you give the video a thumbs up. It really helps the channel grow. Help spread to other viewers who may not be aware of the strategy that we use to make things a little bit easier in trading. Right, trading will never just be totally easy, but if you can make it easier, that's the goal. We don't charge anything for the quote unquote education that we put out there. We don't have membership fees or anything like that. So we feel a free thumbs up is fair exchange, and we won't ask for anything more. So if you could give us a thumbs up, that would be great. If you think it will help somebody, give it a share. And yeah, hope everybody enjoyed today's video. So we'll go ahead and end it here today like we normally do. If you're watching this Thursday night and getting ready for tomorrow morning, hope you get some good rest tonight. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up ready to trade, and we look forward to getting out there and trading with you.